CNBC, of all places, has a fascinating report about growing inequality in America, especially when it comes to the stock market and what percentage of Americans are actually benefiting from it. Now, before I give you the details, I want to show you a video. It's a short snippet of my debate with Ben Shapiro, because when we discussed economics, I would argue that I had the upper hand. Here's the exchange.
The fact is the living standards in industrial countries have been rising steadily, and that living standards in non-industrialized countries, non-capitalist countries have been crap for nearly all of human history.
Wages have been stagnant since the 1970s. So the argument that these companies are competing for labor, it's a cute argument until you take a look at the actual data.
What happened to labor? What happened to labor between 1800 and 1970? And has the government grown smaller or larger since 1970?
Well, I mean, it's interesting that you bring up that time period, because the largest expansion of the middle class happened following the New Deal, and the New Deal redistributed wealth, and by the way, certainly gave a lot more power to the worker in the workplace. That's been rolled back since.
Since the 1970s, the notion that the middle class has been destroyed is a fallacy. The middle class is largely becoming the upper middle class.
Nearly 50% of Americans can't afford a $400 emergency.
I think it pains me to interrupt this discussion because it is fascinating.
Did it pain him to interrupt that discussion?
Yeah. I think what happened there was okay, all right, TKO. No, all right. Listen, this isn't about gotcha afterwards and stuff. It's an interesting conversation, and the essence of obviously why we agree with Anna is called facts and numbers and stats, some of which we're about to show you. But I wanted you to understand the misdirection that Ben was doing there. He was saying, well, between during the time of the Industrial Revolution all the way to 1970, the government grew. So that must be the reason why wages didn't grow. But wait a minute, that's a misdirection in two different ways. One, those things are not causally connected necessarily. And two, it's just not even correct. Wages did grow until the 1970s. They were actually in line with American productivity from about the mid 1930s to nearly 1980. So exactly when they did the New Deal is when wages grew, and proportional to the economy and the success that America was having overall. So it's a massive misdirection to try to blame government for the thing that government actually fixed.
Yep.
And government doesn't always work, of course not, right? But in that case, it worked fairly spectacularly.
So I've been thinking a lot more about that exchange and this notion that the middle class is thriving under the system that we're living in. And of course, we know that's not true. We've been seeing growing inequality since the 1970s. And of course, stagnant wages have a lot to do with that. But also, when you take a look at the metrics used to analyze the economic health of the country, oftentimes they look at the stock market. And I want to take a look at the stock market because the CNBC report shows how the stock market is really just benefiting a small group of people in this country. The wealthiest 10%, for instance, of Americans now own 89% of all US stocks, a record high that highlights the stock market's role in increasing wealth inequality. So the middle class is not in fact growing, it's quite the opposite. Now, the inequality actually did grow much more rapidly during the pandemic. For instance, the top 1% gained more than $6.5 trillion in corporate equities and mutual fund wealth during the COVID-19 pandemic, while the bottom 90% added $1.2 trillion, according to the latest data from the Federal Reserve. The share of corporate equities and mutual funds owned by the top 10% reached a record high in the second quarter, while the bottom 90% of Americans held about 11% of stocks, down from 12% before the pandemic. So whenever you hear about how, the stock market's booming, the economy is healthy, the economy is healthy for a select group of people in the country. The majority of Americans are not actually invested in the stock market. And by the way, the stock market, which has nearly doubled since March of 2020, of the March of 2020 drop due to COVID, is up nearly 40% since January of 2020. So the total wealth of the top 1% now tops 32%, a record according to the Fed data. Nearly 70% of their wealth gains over the past year and a half, one of the fastest wealth booms in recent history, came from stocks. Again, something that the vast majority of Americans are not in fact invested in. Why? they don't really have the disposable income necessary to invest in the stock market and benefit from these types of stock market gains.
Yeah, so I want to go over a couple of really important facts here. And so number one, anytime people tell you about, oh, stock market's doing great, keep this stat in mind, the one that Anna just told you. So top 10% have 89% of all the stocks. So whenever you see a cable news anchor celebrating the stock market, understand they're not celebrating you or the overall economy. They're celebrating the top 10%. They're going, boy, the top 10% did it again. We win again, right? Now they don't tell you that, they make it seem like, oh, we all won, we all won. Now, the other stats that Anna read you, I'll do the math on it for you. During COVID, when we had injection of cash into the economy and there was many other factors that went in, you see the boat rising. But for the top 10%, it rose at a 5x rate, more than 5 times more than it did for the rest of you. So when you hear cable news anchors talking about, hey man, we did a great recovery, they mean we as in the top 10% did a great recovery. You guys are okay, shout, right? And then finally, get a load of the disparity in this country. The bottom 50% of Americans have $3 trillion combined, okay, in wealth. Half the country, it's about 165 million people or so, have $3 trillion. The billionaires, that's only 745 people, period, not even 1,000 people, have 5 trillion, have over 5 trillion. They have so much more. Well, you can go up to 200 million people, they'll still have way more than the 200 million Americans.
Yeah, I want to go to graphic 5 because I want you guys to visualize it. I want it to sink in. This is the way the system works. This is the way the system is set up to work, right? So the 5 trillion in wealth now held by 745 billionaires is 2/3 more than the 3 trillion in wealth held by the bottom 50% of US households estimated by the Federal Reserve Board. Okay, let that sink in. So whenever they talk about how the middle class is thriving, the middle class is growing, no it's not, no it's not. The way the system is set up, think about it. Corporate executives are now paid in stocks, right? A huge portion of their compensation package is through stocks. So they make more money if the value of the stock goes up. And one of the ways that they help to increase the value of their stock is to make as much profit as possible. How do they make profit? By lowering pay, keeping the pay for their workers as low as possible. That's how they maximize their profits. So you have stagnant wages leading to Americans with less disposable income or no disposable income. They can't invest in the stock market. Then you have the Federal Reserve on top of it, printing money and providing liquidity to these corporations and to these banks, and then they turn around and do corporate stock buybacks to enrich themselves and artificially inflate their share prices. Really, this is a system where the middle class thrives? I don't think so.
Yeah, and look, there's 2 possibilities, and they're both probably correct, which is that the corporate media is running cover for the wealthiest people in the country, and also they are the wealthiest people in the country, so they probably look at it just from their perspective. Almost everyone on television is like, my portfolio went up today. Today's a great day in America. So, and they genuinely think that that applies to everyone because it is the hardest thing in the world to see outside your own perspective. And if you told them this stat, you just blind test taste, if you will, said to a random CNBC anchor that hasn't seen it, what percentage of the stocks do you think the top 10% own? They say, well, that's probably a big number. I know how math works. They're wealthier, so of course they're gonna have a bigger percentage. 40%. 50%. If you told them 89%, they say, oh, there's no way. That sounds something like lib conspiracy. By the way, as you noted, the numbers were from the Federal Reserve Board. I don't think the Fed is a lib conspiracy.
Definitely not.
It's a conspiracy of some sort, but it ain't a lib one. Thanks for watching The Young Turks, really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR, so those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.